Okay, here is a look at the E-mini S&P for Friday, March the 11th, 2011. Uh, Going into today, by the way, this is for the June contract. So we're trading the June contract now. And we had mentioned a 97 level yesterday in the video, and also that we'd be trading the June today, and that barrier would be 5 points lower. So it was really around 92, because this is the June contract you're looking at right here. So you can see that in the overnight market it traded well below 92. However, it could not stay below there in the regular trading hours. This profile here, this one right here is today's RTH. This one is the overnight, and this profile here is what happened yesterday. So it kept on butting up. We actually had a high at 93 in the first hour, and it just stayed within that for a couple of hours. And then when it finally burst through, it really indicated a rejection of the attempt by the sellers to hold it below that barrier. As a result, we're probably going to get some additional up movement here. We still need to get above 21 in the June contract to really say that we're intraday bullish, but we're mildly intraday bullish right now, I guess you could say it. We're still within a confines of a containment area, but with the kind of rejection that we had today, I would venture to say that as long as that 92 area continues to hold, that we're good to go and likely to move higher. Our immediate support areas going into Monday would be in the 97 area, so it has moved up some. I am, of course, talking about the June contract here. And we can see that the market possibly finds some support either in the 97 area or the 92 area with an upward bias going into trade tomorrow, or I should say on Monday. Here's the market profiles from just the regular trading hours. You see they're kind of spotty. This is the June contract. Here's our software here, and you can see that we did have 3 trades today. We had a long here, we had a long here, and we had a long here. And those are the only trades that we had today. This first trade here, we were filled on it. It did bounce hit our first objective, but then dipped down and stop us out, so we ended up with a break even on that trade. This particular trade here, unfortunately we didn't get filled on it. As you can see, it just came within a tick, so we missed out on that nice up movement. This one we did get filled in. You can see it right there where we got filled, and had a nice movement higher, moving about 4 points in our favor. Actually, it moved up to here, and then we were stopped out on that trade right here. So a nice profit on that one. So we ended up the day with 5 3/4 points on our 4 contracts. So it's a little bit unfortunate, a little frustrating in the sense that if we had caught this one here, we probably would have doubled or tripled our take for today. But some of our traders, I was talking to one of our traders today, he was able to get in on this trade, and this is of course what our software does, is that you get a much better feel for the market, so you're not always having to just pay strict attention to our fills. If it comes down within a tick of your fill and you're confident in the move, then you're going to bump it up and get a little bit higher fill on the long trade, which is what that gentleman did, for example, today. So as a matter of fact, that's what we've really found is helpful for our traders. It's not so much that we have software that identifies individual trades when they set up and trigger, but you can really develop a much better feel for the market. What is the market doing in a real-time sense as it tests known areas of support and resistance? So it really gives you a leg up here in real-time analysis of the market in order to go ahead and execute those trades with good confidence. So anyway, that'll be it for Friday. Thanks for watching. Any questions or comments, just get a hold of us at info@eminidaytrader.com. Other than that, have a great weekend, and we'll see you again on Monday.